Today, we're going to talk about an old axiom that really rings true today: the fact that markets hate uncertainty. All right, welcome back, everyone. Lead trainer with StocksToTrade, Tim Bohen here. As always with these posts, be sure to go below, hit the blog post for the full breakdown. I'm going to give you my quick thoughts, my input, my ideas behind this, but the team has put together a research post all below breaking down everything about trade wars. So hit that link below. Okay, here we go. Now, we're in a very shaky period in the markets. We're recording this on May 14th. We've actually got a pretty decent bounce day today, but we had some 600-point down days on the Dow. Really shaky to the end of last week, as well as yesterday, May 13th on Monday. Now, why is that happening? Why do we care? And what is behind it? The biggest point I want to talk about is, as I mentioned in the introduction, nothing spooks markets more than uncertainty. So news can be bad and markets can rally. News can be good and markets can drop. But where we're at right now is this whole unknown as to what's going to happen with the trade war. Is China going to raise their tariffs? Are we going to raise our tariffs? Is this going to come to a head, or is it going to come to a mutually, ideally, negotiation that benefits to both economies? I mean, the two biggest economies in the world. That is my thought where we ultimately end up with this. And the biggest thing I want to talk about is, recently in a blog post, I talked about I'm really recently read Scott Adams' book about failure. I think it's a great day trading book, even though it's not specifically about day trading. But Scott Adams had a great quote the other day. Scott Adams, the author of Dilbert, really, really smart guy. I've kind of been doing a deep dive into him lately. Crazy smart guy. But he said, when it comes to the overall market, the S&P, the Dow Jones, these shakiness are an imaginary problem that people like to talk about. I mean, if you look at some of the numbers, I've got the latest issue of Barron's. I've got a few articles. I mean, record high employment. The wages are going up. So not only are more people in 40 or 50 years employed right now, wages are creeping up. There's a supply issue with workers. So the idea is, when there's a supply lacking in supply, the demand goes up, prices go up, just like in people, just like in stocks, or just like in soybeans that I'm actually going to talk about. So when you look at the real data, the economy is booming. I use an example I think many of you might know. I live in a small town in Michigan. I live near a resort town, a really nice lake, and it's a small town, and there are 6 or 7 homes under construction. They were all of them tear downs and building houses that are 5 times the size of the house that was there. I'm actually friends with a lot of construction contractors, both commercial and residential, and these guys are booked out 6 months, 9 months, a year. I mean, the economy is strong, and this tariff news is, I think, an imaginary problem and could create a great potential dip buy situation if you're trading longer term. Again, you can see today the S&P 500 is up 1.5%. It's pushing the high of the day and grinding back. Look for these big down days. Now, you can't blindly buy, but take into consideration the actual data, what really matters. I mean, how many people do you know that are unemployed right now? How many contractors do you know that could show up and put an addition on your house next week? Or are they booked out 6 months in your area as well? What is happening to prices? Prices are going up right now because the economy is frothy. I mean, that's not necessarily a bad thing. So when you're looking to invest long term, look for these huge down days as potential buy opportunities. And something I want to talk about is soybeans. Now, soybeans aren't a penny stock, aren't a direct equity that you can buy, but soybean prices at all-time lows right now. think about this and write this down. I'm not saying you buy soybean futures today. You can with a brokerage account. You can invest in soybeans, but they're at multi-year lows. Who is one of the biggest importer of soybeans? China. So look for these opportunities, because when and if, and I think soon, this will all end, this imaginary problem will go away, we'll close this deal, soybeans price will most likely rocket back because China needs soybeans, okay? Yes, they can import them from Brazil. Brazil's a huge producer as well, but the U.S. is one of the biggest producers, and I think that is going to be, when you look back a year or two from now, again, this is a longer term idea. You'll look back on May 14th, whether it be the S&P, the S&P 500 futures, soybean futures, corn futures, or even blue chip stocks. This could be a great dip buy opportunity. I mean, when you look at all of the data, it's conclusive. So remember, the biggest lesson for today, and the biggest thing I want you to remember, is when the hard data says one thing and emotions say another, those are opportunities to buy. Great quote that I will end on by Warren Buffett, maybe the greatest ever. Be willing to buy when others are fearful, and be fearful when others, are bold. Okay, I butchered the quote, but the idea is look to do the opposite of emotion. When everybody's freaking out and markets are tanking, but the data is telling you something else, be like Warren. So again, thanks a lot. Be sure to hit that post below. Check out all of the data, and check out soybean futures. Check out the S&P 500. Check out quality stocks, and check back in a month or a year, and let's see where these instruments end up. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.